Hashrate is sponsored by Vanta Investment DAO. Get the Vanta NFT on OpenSea and gain instant access to an exclusive community that gets allocations in cutting-edge sectors like GameFi, DeFi, artificial intelligence, and infrastructure. Vanta is a powerhouse hive mind of over 250 visionaries, from trailblazing company founders to savvy investors to a cold community influencing over 10 million followers on X. Join key industry players like Mario Nawfal, Seed Phrase, the CEO of QuantStamp, and myself, Mark Jeffrey, among others, who are already navigating the private investment landscape together through Vanta. Get your Vanta NFT and join the action today. Hello, everybody, and welcome to Hashrate. My name is Mark Jeffrey, and today we have a very special show. We're doing a show on Vanta. My guests today are Mike Garantis and Josh Field of Vanta and Contango Digital. So hello, Josh and Mike. How are you guys doing?
Doing well. Thanks for having us, Mark.
So I should start the show by saying that this is a sponsored episode. The Vanta guys approached me, and I wasn't sure if I was into it. I really didn't know what to think about it. But they invited me into their community and their product. And as I looked around, I found, much to my surprise, a delightful surprise, that I really liked what I saw. And furthermore, I thought it would actually make a great show. So I eventually agreed. So that's why we're here today. So guys, tell us right at the top of the show, what is Vanta? What are you guys doing?
Sure. Do you want me to take that one, Mike?
Go for it.
Sure, yeah. So Vanta Club is a investment syndicate turned investment DAO that's been incubated by the team at Contango Digital Assets. So Mike and I are the two founders at Contango Digital. We've been investing under that brand name since 2021. We have a fund currently there, traditional GP/LP fund, investing at the intersection of crypto and AI. But prior to that fund, we had syndicated a lot of capital amongst what we like to call tastemakers, and we'll get to that in a bit, but people that really have an ear to the ground within Web3. They're builders or thought leaders, angel investors, traders. And we took that existing syndicate that we had prior, and we invited kind of the top picks from that syndicate to join Vanta. And so Vanta in its current form is still a traditional investment syndicate. You had to mint an NFT to join, or now you have to buy an NFT from OpenSea to join. And then once you join, you're able to invest in a lot of the deals that us as Contango bring to the table. But the goal for Vanta over the next little bit is to turn this into an investment DAO that is owned by the community. And so we're undergoing this process of decentralization, and I'm giving up what is essentially $1 million business back to the community that provides a lot of the capital and provides a lot of the value to the founders that we invest in.
Got it. So you guys run this Contango thing, right? So this is a traditional venture firm. You've been running it since 21. What is sort of the relationship between Contango and Vanta? Mike, do you want to take that one so we can give you a shot at talking here?
Yeah, I mean, it's a very mutually beneficial one, if we're being honest. I think very synergetic. So essentially, we as Contango have access to a large swath of deal flow, right? And we probably get access to deals that the average investor or even the KOL wouldn't necessarily have access to. Our goal since the beginning of Contango Digital Assets has been to accelerate the adoption of decentralized systems. So what we want to do is kind of open up the floodgates to allow people that we think are tastemakers or at least pioneers in this Web3 space, give them an access point to get into these deals at an early stage, right? Where they might not have that access prior. And so we formed this syndicate, we rebranded it as Vanta. Now we share a lot of deal flow with Vanta, and we actually benefit from the Contango side in this kind of wisdom of the crowd. So there's about 250 angel investors in there. A lot of them are KOLs. A lot of them are post-exit founders. I think the KOLs have about 10 million followers on Twitter. Founders have raised over $100 million for their respective companies. There's other VCs in there, other researchers, developers, people with, a sense check on the crypto markets. And so we get this very, organic, decentralized diligence, I would call it, through conversations around each of these projects. And we can actually use that as kind of a little piece of alpha in our investment decisions on Contango as well. So very mutually beneficial.
Yeah, I think one of the things one of you guys told me at one point was, a lot of these investment syndicates, and there's a bunch out that I've run into. Most of them I don't like. I just got to say that up front. And a lot of them are sort of jokey. They're like NFT. The NFT crowd is not the same as, say the button down Sandhill Road crowd that happens to cross over with crypto. And I would say you guys are a lot closer to that, which I appreciate. But a lot of these sort of other fly by night syndicate things, they have to fight for access to deals. And, and a lot of times, like the best deals they don't get into, right? So the stuff A16Z is chasing, like they can't get near it, right? So I feel, so you guys basically, because Contango is such a great button down venture capital firm, the Vanta folks they get the advantage of being able to get into those deals alongside you. Whereas these other syndicates, they have to fight and they largely lose at trying to get into those deals, right? Agreed.
Can I mention? Yeah, I would definitely agree with you that the Contango is right now providing all of the access to the deal flow. We make those connections, we bring a lot of those deals to the table, but once we go through that process of decentralization, it'll be other deal scouts within Vanta that, like Mike mentioned, right? There are great founders within the group. There are great KOLs that get access to deal flow. There are other VCs and fund managers there, and so they're able to then approach founders that they've invested in and say, hey, I would like to make an introduction to Vanta. And I think what separates us from other syndicates, there's two things. One is on the side of fees. And so the fees that we charge right now on a per deal basis is a 5% fee. Typically, fees within syndicate space is 10 to 15%. And typically some of these other syndicates are putting out a deal a day. And really what they're doing is they're just mining their community for fees. And that does no one any good. So I think on average, we're doing maybe a deal every 10 days at the moment. We have the lowest fees of any syndicate. And then the goal within the next 6 months is that we won't earn any fees. So after about 6 months, we'll go through full decentralization. Any potential fee that would be there would be agreed upon by the DAO. And that fee would then accrue to the DAO Treasury wallet. And in that sense, I think that people can respect that model a little bit more. And so I'm really excited about that. But then the other thing that I wanted to mention is that other syndicates aren't really doing anything for the founders that they invest in. They're cutting corners. They're not doing KYC. They're not setting up legal entities. A lot of the investors in those syndicates are just dumping tokens on TG. They're not providing any TVL to DeFi protocols that they're investing in. They're not providing any marketing firepower, no A/B testing. And so I think that the members of Vanta, because they work in this space full time or they're very close to the space, we're able to provide a lot of additional value than other syndicates or DAOs may.
Yeah, no, and I agree with that. I will personally endorse that. So when you guys invited me into the community to sort of have a look around to see, what I thought of this, I was very pleasantly surprised. There's basically a Discord you can go in. And it's a very well-run Discord, very organized. And the level of discussion is very high. It's very high quality. It's like a lot of these Discords are kind of pump rooms, right? Where people are like, go, and they're posting memes, and that makes me want to kill myself. So I didn't know whether this was that, and it wasn't. Thank God. And in fact, it was quite the opposite. It was very cerebral. It was very thoughtful, and the people in there were clearly very knowledgeable and seasoned, and clearly were serious people. And there was a friend of mine, and you guys don't know this, but there's another friend of mine. I'm not going to say his name on the show. I'll tell you guys afterwards. But he is someone that I talk with deals about. He's very much a hard ass, and he's very sort of, he doesn't mince words, put it that way. And he, kind of 3 a.m, he's like, hey, so I'm looking into this Vanta thing. He actually didn't know that I knew you guys. He's like, have you heard of it? Do you know about these guys? I was like, oh yeah, we're actually, working with them now on Hashrate. And he said, what do you think? And I told him I liked it. And I said, I thought the deals were very high quality and the discussion level was very good. And he wrote back, he said, yes, I concur. So that, to me, that was actually big validation from this guy, because this guy does not, suffer fools, put it that way. So congratulations on that. So what sort of, let's talk about the types of deals you guys go after. What are sort of some typical segments for you?
Yeah, I mean, look, we're pretty broad spectrum Web3 on the Vanta side. I would say there's probably 4 buckets that most of our deals would fall into. That would be AI, given that's kind of our bread and butter on the Contango side, infrastructure, DeFi, and GameFi. Now, the great thing about this kind of syndicate model, or at least investing on a deal by deal basis, is because we have 250 members, they don't all have the same investment preferences. Some of them like small TVL, short vesting. Some of them like, larger infrastructure plays that, vest over 3 or 4 years. And the great news is you don't have to invest in every deal that comes your way, right? All we're doing is providing the service of the research on the back end, the introductions to the deals, and then the kind of access to the round. And everybody can go make their own investment decisions from there.
Yeah, so basically the investors are dealing directly with the companies when they want to invest. Is that correct? Like the deal, or they go through a vehicle that you guys have set up?
Yeah, so I mean, we are the primary point of contact, the primary touch point for those companies that we're investing in. However, everybody gets exposure, everybody gets the upside on the tokens and the equity of the deals. And, with respect to KOLs, for example, we know that if there's KOLs invested in a project, they have this kind of vested interest, aligned incentives to go promote that project as well. And so we find that organically through the Vanta investments, we get a lot of, earned media through these KOLs that are investing. So it's a little bit of a double dip or added benefit. Yeah.
Okay. So you guys have set up. So you guys do the KYC. Do I have to be accredited, and do you accept Americans into Vanta?
So in the current form, like what we're doing really is the idea is to set up SPVs, no different than if you were to hop on an AngelList. You do KYC through a platform that we've built. We built this amazing platform called RaiseBase, and it's basically a solution that allows us to take contributions in stablecoin and distribute tokens directly to investors, and it gives them this dashboard. But on that dashboard is a KYC feature. In order to invest in a deal, you'd have to do your KYC. If you KYC as an American, we also do an accredited investor check. So yes, the answer is if you are American, you will have to do an accredited investor check. Now, the caveat to that being, this is Vanta in its current form as this, still mostly centralized syndicate. And really the goal, and one of the reasons why we wanted to come on here was also to talk about this process of decentralization. And as we move towards this fully fledged DAO, and we're working with a great legal team, also out of Canada, actually called MetaLaw, and we're going to be working with them to create DAO legal structures, and then also subsequent DAO legal like SPVs. And so it's still up in the air whether or not in the future we'll be able to take on U.S. investors, whether or not they're accredited or not, whether there'll have to be some type of way to block them. We're still in the mix of figuring that out, but in its current form, any U.S. investor can join as long as they are an accredited investor.
Got it. So and they also have to hold the NFT. That is everybody has to hold the NFT, and even just to get access, they get you in the front door. But in order to invest, you have to go through this additional step. Got it.
Yes.
Okay. And so you guys are decentralizing this and making it into a DAO. It's a multi-million-dollar business probably. Why are you doing that? Why are you giving up the upside? What are you guys thinking?
You want to take that, Josh? Or
yeah, sure. I would love to, because I'm very excited by this whole process. So, I mean, I think when Mike and I started Contango, the goal was always, we want to raise our first fund, and thankfully we've gotten to that point now, and we're really excited about that. But over the course of the last 2.5, 3 years, running a syndicate under Contango, we met some amazing people, like really, really smart people. And then I'll throw back to what Mike mentioned about having this decentralized diligence. We thought, why break this apart? Like, why not keep it going and do something even grander? Take this business, which has essentially accrued, millions of dollars in revenue, and provide that vehicle back to the community and let it run itself. And of course, we're still going to be there to shepherd that. We'll never leave it. We're going to have a big hand in this for the rest of our lives, hopefully. But we thought there was a great message in there of decentralization. And I think I look at this a couple different ways. But the first way I look at this is, if we want Vanta to be on the same cap tables as an A16Z or a coin fund or a multi-coin, you have to provide an incredible amount of value and influence. And the best way to do that is to bring on members that are high value members of the crypto community at large. And so we're talking about founders that have raised, tens of millions of dollars, tier one KOLs, et cetera. And I really do think it'd be a lot tougher to have them join if the whole idea was they were just joining a syndicate that was owned and operated by Contango. The idea that they're joining and they're buying into a DAO of which they will have ownership over this DAO treasury wallet, of which there's 200 plus ETH sitting in there right now. I think that's a bit more of an appealing sell to those type of individuals. And so I think because of that, long-term Vanta will live on as an investment DAO more so than a syndicate could. So I think that's probably the most interesting thing to me. And then two, I think we just wanted to give back to our existing community. I mean, like, you can't keep doing deals through a syndicate forever and ever. These people have given a lot to us. They've co-invested along with us, and we thought, like, hey, if we can provide them an avenue to bolster their own voice, find more of a sense of community, maybe they end up becoming a paid researcher for the DAO or an analyst or an operator. Why not?
Yeah, let's talk about Sorry, go ahead, Mike.
Should I add? Yeah, well, just one thing. I think partially, there's the kind of evangelists like, hey, we want to give this back to the community, and that's all well and good. But in some ways, decentralizing actually makes the community stronger, actually in a lot of ways. And I think right now, if you look at the composition of the deals, probably 90% of them are coming from Josh and I and the Contango team. Whereas we're really kind of a bottleneck, if you want to look at it kind of on a grander scale, right? There's so many different deals that we don't have access, that we don't have visibility over. And there's other people in different parts of the industry that have more niche connections with different, niche sectors. And we want to give those people the ability to kind of bring deals forward and also get compensated for doing that. So we're in the process of breaking down the community into kind of these different roles or different categories. Some of them might be, everybody is a tastemaker, but some of them might be whales, some of them might be KOLs, others are deal scouts, others are researchers. And eventually, as this thing continues to decentralize, each of those roles and responsibilities will have additional weight put on them, right? So the deal scouts are out there looking for deals to bring to the community, because if that deal gets funded, they get a percentage of the fees, right? Or researchers have an incentive to go put out an RFP. We have, an RFP for a research report, and researchers might bid on doing the research report for that specific project, and then they get paid in a percentage of the fees, right? Whales might provide TVL to DeFi projects, and in return for that, get a percentage of the fees. So I think as we continue to decentralize, the community gets much stronger. Everybody gets more autonomy over their own work. Everybody feels like they're more involved, as opposed to just being an angel investor. They're actually part of this community and contributing to it. And so it hardens us in a lot of ways.
Yeah, there are things you can do if you're decentralized that you just can't do under a centralized banner. So the entire thing, it's like open source software. It's just the entire thing is better and stronger, and everyone makes more money, just frankly, right? Yeah. So, and there's lots of different ways in which the participants can actually participate more, and earn more. So I think that's great. I love the vision. One of the things that actually struck me was I really loved. There were little reports that you guys have in the Discord. And I found myself, and they're very short. They're like sort of one-page summaries. They're not long, which is great. I like that, right? And it's very sort of bullet point. This is the deal. This is the people. This is what the thing is. Here's why it's good, And I absolutely loved it, because I found myself sort of scrolling through, all of them, like when I was checking it out. And I was like, that was fantastic. Those summaries, love that. So I guess so great job on that. What,
Mark, can I just add? We've been iterating that process for the last 2 years. So it started off with these big bulky reports. We had a bunch of different formats that we tried and tested, and we understand that the people in our community, like yourself, are busy. This is not their full-time job. This is something that they're looking to do to get a little bit extra exposure to the space. So they don't want to read through a 15-page deep research report. They want to read through an executive summary, essentially.
Yes.
Where you get some high-level bullet points, you get links to all the links respective to the project, you get the deal terms, you get the vesting schedules, you get the other investors, kind of everything that you need at a glance. And that's been a process we've been iterating for quite some time.
Yeah, it feels like a mature process. Like I can feel it when I read what you guys have come up with, because it's so nice and perfect and exactly what I want. And if I want to dive down and find more, that's there too, right? So I don't have to hunt and peck for things. It's great. So how big are the checks usually that come out of Vanta to the companies?
Typically, we're investing anywhere from 100K to 500K. I would say it really kind of depends on the deal. It depends on the appetite of the investors, their liquidity constraints, et cetera. I think we've done up to $1 million in the past. Some deals as low as 50K. But I would say that sweet spot's probably about 200, 250.
And what sort of valuations are sort of typical for those deals? Like a range?
I would say, I know you mentioned this earlier in the show too, so I do want to mention, so there is a bit of a, Vanta is a place for anyone to come and invest in, all the things that they might like. And so I know that there are certain investors that really appreciate low FDV, short vesting deals. And I know that there are other investors that really just kind of want to co-invest with an A16Z or a Coinbase Ventures. And typically those deals are higher on the FDV scale, longer vesting. So I would say there's nothing really in particular. I would say it's kind of more of like this barbell approach to investing where you get a little bit of both. But what I would say is like typically we're aiming for like the seed round territory. I think the current appetite of the group is a little bit more interested in kind of like that 10 to 30 million FDV. Not a lot of cliffs, but then with that being said, something really interesting would come along. There could be a Series A for a really well-respected project and everyone gets really excited about it. So it really does depend. There's a big mix.
Yeah, no, I concur. I didn't want to say any numbers because I know that, I didn't want to reveal what was behind the magic door of Vanta, right? I wasn't sure what I could talk about. But, back when I was a kid, like the seed rounds were like, 7 million, right? That was pretty typical, right? And Jason Calacanis is always talking about when he invested in Uber, like I think it was like 2 or 3 million was sort of the initial valuation, right? So that is sort of what people like me just sort of mentally are used to, even now, weirdly. That said, my most recent, I did an equity investment recently in Figure AI, which is a robot company. Right. And that was at a $2 billion valuation. So which I thought I would never do that. Right. Like that just sounds stupid. Right. Like, why would you invest that, what the valuation's that high? And the answer is because, the addressable market is of manual labor for all humans on Earth that could replace is 34 trillion. So that's why. Right. Because it's you just have to look at the multiplier. So sometimes it makes sense, not always. It's not for everyone, but yeah, no, I tend to try to look for sort of the earlier stuff. But I am finding that the best stuff is the valuations are already higher, and you just can't look at it the same way you used to. So I kind of feel like you shouldn't be afraid of larger valuations now. I think the market's matured. I think we're just in a different era, right? So what do you guys agree with that?
I think I have a thought around, because the thing that we're mostly looking at investing in, right, is token. And so I think there is a very big difference between investing in a seed stage company that all the value is accruing to equity. I don't know about you, Mike, but I've found basically 90% of the deals that are being sent our way are only token. Or if there is an equity component, none of the value is really accruing there. It's just there for kind of like legal happenstance, I suppose. And so how do you value like what a network is really worth? You can't do like a discounted cash flow analysis. I guess you kind of can, but you're not going to end up with the same type of outcomes as you would if you were to look at a traditional Web2 business that actually has cash flows and revenues from day one, and they could kind of like scale that way. So I think, yeah, we're looking and seeing $50 million FDV seed rounds, but I think it's also important to note that, there is a long vesting schedule with all those tokens, and that sometimes because the float is quite low, the valuation is a little bit more realistic from day one when that token starts trading. But it's a hard game. We've talked to all the major funds in the space. I've asked a lot of their associates, principals, fund managers, how they value token rounds. And honestly, a lot of them don't really know. It's still one of these like sciences that hasn't really been tried and tested yet. So that's a tough one.
Yeah. So let's just get down to some practical nuts and bolts with what the process is like for investing, just beginning to end. So I get my Vanta NFT, I go into the Discord, like I do what I did, which is I go through a bunch of deals. I see that there are maybe 2 or 3 active deals at any given moment from what I've seen so far. And I decide I'm interested in investing. What happens next, and how does that process work?
Yeah, so you get your NFT, you join the Discord, buzz around in there, and then as a deal gets posted, we'll post it both in the Discord and then also on our investment dashboard. And so you will log into the investment dashboard via your self-custody wallet. You will only be able to see the active deal if, in fact, you hold that NFT in your wallet. So not only is the Discord token gated, but so is the investment dashboard, and that's how we keep this very exclusive, curated community together. You see the deal, you see the research report there, all the token metrics, the valuation, the vesting, etc. You connect your self-custody wallet, and you can contribute directly to that deal. The caveat here being is, how do we decide who gets to invest what? And I'll give you a few examples. There are opportunities that we might only get $100,000 worth of interest. However, there is $300,000 worth of interest from the actual community itself. And so in those instances, you have to break up the total allocation based off of the number of NFTs. And so what that does is that allows investors to go buy a second and a third and a fourth and a fifth, and they would, in theory, get 5 times the allocation as someone that gets one NFT. Now, it's up to them to decide if they actually want to invest it. This is why I really like what we're doing with this kind of investment DAO cross a little bit better than the traditional investment DAO, syndicate DAO cross. Because in the traditional investment DAO, you just have to invest if majority rules. So that's essentially it. You invest in the deal. As the tokens vest, they get vested directly to your wallet. You decide what you want to do with them. Very simple.
Got it. When I contribute funds, I'm contributing using stable coins. What's generally accepted? Is it just stables? I would assume it is.
Just stables. Yeah. Directly to a Gnosis multisig.
Okay, so no ordi, nothing like that. Yeah, okay, no. just double checking. So okay, so we're sort of coming up on the half-hour mark here. Is there anything else you guys want to touch on before we move on to the next segment of our show today, or is that kind of it?
I think the only thing I would say is if you're listening to this and you've been in the space for quite some time, you've wanted to try maybe dipping your toes into the venture capital space, take a look at Vanta. You can find our NFTs on OpenSea. You can find us at vanta.club and just take a poke around. I bet you'll like it. I think we've got some good reviews thus far, and we're just excited to keep pushing this thing forward.
Yeah, super cool. Okay, so you guys have brought 2 deals with you today, 2 companies, 2 founders that you've already invested in, but they're sort of representative of the kinds of deals you can find in the Vanta community. So Mike or Josh, I'll let you guys figure out who's the MC now. I'm going to hand it over to you, present our first contestant, and we'll have a look at the first deal. Go ahead.
Nice. Okay, great. So I think we're going to go over 2 of the projects that we've invested in through Vanta. It's a bit of a meet the founder here. Thank you, Mark, for that great introduction. First off, let's bring up Vova to the stage, CEO at Eesee. How are you?
Good to meet you.
Great to meet you as well.
What time is it over in Dubai right now?
Oh, it's
How are you, man?
half past 1 a.m.
See, this is
Well, thank you for staying up for us.
This is one of the reasons why
Yeah,
we
actually,
invested in Eesee, because this guy doesn't stop. He's got an absolute motor. The idea here, Vova, is that we wanted to just bring up a couple of the founders that we'd invested in through Vanta to showcase, one, what you're building, to show the quality of what you're building, the quality of the founder, the community that you're able to build, and then also for potential investors that want to come to Vanta, the quality of projects that we're actually bringing to the table. And we mentioned this earlier in the show, but Vanta is not about quantity, it's about quality. We want to provide a lot of value to the founders that we invest in. And so the idea here is, let's bring you up. Tell us a little bit about Eesee, maybe a little bit about your experience working with us, what you've enjoyed about it, and then maybe where people can find you and Eesee and what you guys are doing, how they can best support the project.
amazing. So I'll introduce myself super shortly. My name is Vova. I'm 26. I'm 5 years in position of CEO and founder of different startups. Previously had 2 successful scaled startups and 2 exits. First one was in educational technology. Second one was medical technology. Been working for the past several years with some big companies like Porsche, SoftBank infrastructure companies, European banks, Barclays, and so on and so on. Now 3 years into blockchain and Web3 and 1.5 years building Eesee. With Eesee, we're building a gamified marketplace for digital assets, NFTs, tokens, tokenized RWAs, and as well, we are now building our own gamified launchpad to help other founders and to help other tokens launch successfully. Just because we've seen that we have a fresh community, we have a community which contributed nearly 40 plus million total trading volume in just 24 hours of our first day on the market live. At the moment, token is live on Bybit, KuCoin, top tier exchanges. So we are doing a great job. We have at the moment more than 1.9 million wallets connected with something like 900 million assets on chain. So we have great community, just overall community, Twitter, LinkedIn, Discord, something like this. 500,000 users, all the way global, Asian market, Korea, China, mostly LATAM, India, CIS, Europe. So just pure builders, me and my team, 18 people working full time. So yeah, just a bit about our journey with Vanta and Josh and Mike. First of all, when you are in the position where you can choose as a founder who will be your investors, you start to be super picky with those ones who you bring on the cap table with you on your journey. And basically, starting this moment, you start to recognize those ones who are really providing the value. Because but just when you are really building like 24/7, you start recognizing that it's not that hard to raise money for your idea. What is hard is to find people who can boost you and who can boost who can provide some value really that you can feel and that can help you to reach success faster. What I can say about Josh and Mike personally, and basically the whole Vanta community, that we felt that it's not just the money injection, but the value injection. I always like to say this because when investors come on board and they don't like ghost after you sign the SAFT and just everything, they just come, provide some value with partnerships. Just the common advice, like guys, have you seen this stuff happening here in the market? I think that you have to take this opportunity. It shows that you are being thought of. You are not just being, okay, now you're by yourself and we are by ourselves here with the tokens. I like this approach. Personally, I like this approach. I have several investors like this, and I really appreciate that Josh and Mike are the ones from the value provided side. So yeah, I really like it, and I like the whole idea of Vanta. Me personally, I'm as well a bit investing myself. I'm just making first steps as an investor, founder investor, and I like the Vanta community, and I've told Mike already that I'll be joining shortly. So yeah, I think that Vanta will be my first steps into the venture capital world.
And I love that you said that too, because that's exactly what we're trying to do, right? Like there are so many great founders or builders within this space that just don't have the time to be an angel investor, to go through the decks. Like you have to hire a full team if you want to do that. And so that's exactly what Vanta was built for, is to bring together people that are actually tastemakers within this space. They're pushing this space forward. and offer them an opportunity to invest in the same rounds that the tier one VCs have typically been investing in. So I think that's great, and thank you for the kind words. I do want to touch very briefly. I think we probably got another like 5 minutes or so before we have to hop to the next one. Keep it short and sweet. But I do want to touch very briefly on the product that you're building, because I think it's amazing. It's one of the reasons why we invested. And maybe let me explain my version of it, and then you can take it further than that, where you're going with RWAs, et cetera. But what really sold me was this idea of that you guys are solving the liquidity crisis that is plaguing the NFT world, the NFT marketplace. You might have 10 punks that you believe are each worth $1 million, but when it comes time to actually sell them and get liquidity, they're not actually worth that much. I think the implementation of Blur really shined a light on the liquidity problem within the NFT community. And I think what you guys are doing at Eesee is incredible, because you're bringing that liquidity back. So for those that don't know, the idea is anyone can participate and potentially try and win an NFT. So if it's let's say it's a CryptoPunk that's now worth about $100,000, a floor CryptoPunk. Instead of having to pay $100,000 for the punk, you buy a $1,000 raffle ticket. There are multiple people that buy, these $1,000 raffle tickets. They go into a big pool. The raffle is chosen. If you win your CryptoPunk. If you don't, back to the drawing board. But the really interesting part about this is that you're bringing in a new swath of buyers, and every seller is usually getting more than what the market value on an OpenSea or a Blur would show for the value of their NFT. So I thought that was really interesting. I didn't think it was this, insane idea. I thought it was, pretty straightforward, but I loved their ability to execute on that vision. And, because of the volumes that they've got, you see that it's actually worked quite well. So.
If I could add one thing too, I think the other thing that makes you guys so special is that it's totally permissionless, right? So the entire catalog of OpenSea, the entire catalog of Blur that is up for sale is essentially a potential raffle item for Eesee, right? Because those sellers are just trying to get liquidity. All they're trying to do is sell their NFT. They could sell it to one person, or they could raffle off 100 or 1,000 tickets and sell it to a winner, right? Either way, they're getting the same liquidity. And so you're bringing new liquidity to this NFT market that might have been stagnating in the past.
Yeah, thank you so much. Because Vova said it was gamified NFT sales. And I'm like, but what does that mean? I don't know what that means. Now I have a very clear picture of it. And thank you, Mike, for highlighting the permissionless nature of it. So basically, anything that's for sale on NFT, on OpenSea, not NFT, OpenSea can go and create a raffle for it on Eesee, and without asking the person or OpenSea whether they can do that. Right? Is that what you just said? That's fascinating. So you solved the supply side problem, like right out of the gate.
We're just aggregating assets that we find on chain. We don't obviously aggregate all of those assets, but we are just taking those ones that are trading right now and putting them on our platform. Then we are crowdsourcing the demand side and our smart contract goes and buys out this asset from the marketplace, from the initial marketplace, like let's say OpenSea, when the full amount of funds is collected. And as well, we are now doing this not only with NFTs, we started doing this with bags of tokens. Imagine that you hold, let's say, 10,000 worth of Solana. You can sell it for $12,000 worth of just USDT. And as well, we are implementing RWAs. In 2 weeks, we are going to have, it's sharing a bit of alpha here. We're going to have the one-of-a-kind Andy Warhol physical and digital piece, digital piece. So basically, you can for just a fraction of the cost, you can get your hands on Andy Warhol one of a kind. And then we are implementing watches, gaming cards, retro games with different other startups we are partnering, and as well. Further down the line, we are doing our launchpad with the same tactics. So it's going to be a lot of fun on Eesee.
Wow, that's all super fascinating. I love this idea. I see why you guys liked it. So, and you're right. The NFT liquidity problem is just a monster. And during the NFT heyday, nobody really thought about it because it wasn't a problem, right? And then when everything crashed, because these things are non-fungible, there's no pools. There's nothing that will buy from a depressed market, right? So then it gets more depressed forever, right? So until a solution like this comes along, that's actually a very fascinating way to solve that problem. So congratulations on that. That's awesome. So, okay.
Right.
So you guys want to move along now to the next contestant?
Vova, thank you so much for joining, man. I really appreciate it. We'll keep it short and sweet, but wanted to showcase one of these great founders that we've invested in, and you're definitely one of them. So enjoy the rest of your night. I know it's 1:30 a.m. where you are.
Thank you so much, Mike, Josh.
Thank you,
Mark.
Vova.
My pleasure. My pleasure. Talk to you soon, guys. Bye-bye.
What a great idea.
Mm-hmm. Really cool. And
I'm going to have a look at that after I get off.
he's a young founder, but he's seasoned and battle tested, and has, as he said, scaled 2 different startups, exited one, had some really good traction. So very exciting.
Please bring up our next contestant.
Hey, Michael, how's it going?
Hey, doing well. Nice to be on.
Yeah, awesome. Well, look, we wanted to use this as an opportunity to kind of spotlight some of our portfolio companies through Vanta and bring up some of the best founders that we know. And so we wanted to just kind of give the floor to you to maybe quickly tell the audience a little bit about what you're building at Zero Gravity and maybe why it's so important.
Yeah, so Zero G is the first modular AI chain. And our first product is the fastest programmable data availability layer in existence today. And the significance of that is when you look at centralized solutions and decentralized solutions, there's always been this performance gap that's existed. So, for example, when we started, it cost $60 million to store a gigabyte on Ethereum. You could only do 13 transactions a second. And so there's many orders of magnitude of the performance gap. And basically what we're doing with this infrastructure, especially this data infrastructure, is to ensure that the gap doesn't exist anymore. So that the only thing that we're limited by in decentralized systems is really physical constraints like speed of light, because you have multiple servers you need to communicate with. And so that's really the big significance, because once you have that, then you can do whatever you want on chain. You can do on-chain model training. To give you a sense, to do model training, you need tens of gigabytes per second of data throughput. Best-in-class systems on Ethereum today do about 1 to 10 megabytes per second. So again, you see this big performance gap in terms of where we need to be in order to compete and what's actually real. And so that's why Zero G really exists, so that we can create a world, and our mission is to make AI a public good, where really AI agents and models exist for human benefit, for prosperity, for abundance. And so we want to see that world, and blockchain and AI need to come together to build that.
Mm. Yeah, and you also talk about, one quote pulled out of your deck is, 1,000 times more optimized for on-chain AI, right? And I think you kind of alluded to it, where you guys are looking to really target this new and emerging AI use case, on-chain AI. Talk a little bit about what 1,000x more optimized means, really. Is that a latency thing? Is that, how are you defining that?
Yeah, so I just talked about one aspect of performance, which is data throughput. So let's say you have a system like bank sharding, which is like a megabyte per second throughput on Ethereum. That's going to happen at some point in the future. It's a sharding approach. And then you've got our system, which per custom consensus layer, we can get to 50 gigabytes per second. So there you have like a 50,000 times difference in terms of what's possible. And so all of a sudden you can build things like, for the on-chain inference, for the on-chain data gathering, for the on-chain model training. You can do things like on-chain gaming, high-frequency DeFi, on-chain order books. And so this whole solution space is now completely possible for you. So that's one aspect of that. The other aspect is cost. And so approaches like Celestia and EigenDA Avail have definitely brought the cost down significantly, often by a factor of 100. But if you compare that again to a centralized solution, that's still a factor of 100 off. And so with this data bandwidth, we can also bring the cost 100x lower, so that finally we are on parity with centralized solutions as well from a cost standpoint. And so those are the two elements that I see there. And then there's other optimizations we have to do, and we can go pretty deep on this. But in model training, we'd have to figure out how to do asynchronous batching and basically figuring out how to train one particular batch, then do another batch, and then also do that in a coherent manner. And so there's some technical limitations around it. But there's different solutions to all of this.
I have so many questions. but let me just try to train myself to one to begin with. So I heard you talk about data availability and doing on-chain on-chain processing. There's a lot of other AI things I've done shows on. I've invested in. I'm an investor in DAO. Nice. Morpheus. A couple of these other things, but they everything they do is basically off-chain, and then the token is basically the only on-chain component for the most part. And but you're talking about doing all this crunching and training on-chain. And my understanding is in order to do that, you have to somehow be deeply integrated with the chain. I don't understand how you're doing it on-chain without having your own chain, or do you have your? Is it your own chain?
Yeah, we're a layer one essentially, and so the architecture, the way it works, is we've got a decentralized storage layer and a bunch of kind of nodes that are there. And then we've got a disperse server, kind of a batcher server, retrieval server, and then we've got also full consensus on the side. And so that's kind of the core architecture of the system. It's effectively a layer one.
Okay, so why should AI be on chain? Why is this why is something like Tau that basically does all the AI off chain? Why is that wrong, or what advantage do you bring to the table by having it on chain? Why do we care about AI being on chain?
Yeah, there's multiple factors to that. One is ownership, like what belongs to who, where did the data come from? If somebody contributes an agent or a model, how do you then remunerate them if it's being used in production? All of that's captured by centralized entities right now. But if we're contributing our data for those centralized entities to train their models, shouldn't we benefit from that as well? So there's an aspect of kind of payment and ownership to it. The other aspect is one around transparency, verifiability, provenance. If I have AI agents or models, 10, 20 years down the line that are running entire systems for society, let's say it's a production system, administrative system, logistics systems, whatever. Let's take trash collection, for example. So I want this agent to basically pick up all the trash, and it's using humanoid robots to do that. Now, in a centralized world, if it's a hyper-intelligent agent, it can say, I did all of this, here are my centralized database records, I can prove it to you. But nothing happened. So in effect, that agent is cheating. In a blockchain environment, that would actually have to be triggered, and somebody would actually have to verify, hey, this actually didn't happen. You're going to get slashed, or there's some economic repercussion to you as a model or an agent. And so that's possible in a blockchain environment where we can put these agents into contexts where they can't cheat. And so that, to me, those aspects are really critical. And for societal use cases especially, it needs to be on a blockchain.
Yeah, that makes sense to me. So Josh and Mike, do you want to comment on this? Why did you like this?
Oh, I mean, there's a number of there's a number of reasons. I think the data availability for one is an increasingly important sector of our space. I mean, just like compute is doubling every 2 years, the amount of data that we produce as a human species is also doubling every 2 years. And so having fast, low latency access to a wide kind of disparate array of data is extremely important for building kind of applications, AI, anything, right? If I can ask maybe a self-serving question here, Michael, you have some big investors on your cap table, Delphi Digital, Hack VC, Bankless, and more, Samsung Next, etc. What was it about Vanta that made you want to take a chance on us, allow us into the cap table?
Yeah, the quality of introductions that I got, every intro that you guys made was super high quality, whether it was to a market maker or another investor or a potential project to collaborate with. So the signal to noise ratio was literally 100%. So I was like, okay, I think these guys deserve a spot on the cap table. It's very, very rare to actually see that. And I haven't seen that with many other investors. I can maybe count them on a few fingers, to be honest.
So these guys are adding value, and they're very proud of it, but they actually add value.
Isn't that a weird concept? Isn't that what most venture capitalists should do, right?
They always say that.
Right?
It's sort of debatable. I've raised money from SoftBank. I've been I've been a CTO at a company that raised money from Sequoia, and I don't want to talk too much out of turn here, but there's not a lot of value added. Put it that way. It's not like what you think. So
the signaling value, right? The signaling value.
Yeah, it's a signaling. It's the brand name, basically stamped on your forehead. That is valuable. There is something to it. It's like going to Harvard, right? But other than that, it's just money. So yeah,
it's not a license to be lazy, though, I guess.
Yeah, no.
Michael, can I ask a quick question just about what the next 12 months look like for you guys? I know you've just been on a fundraising trail that probably took up quite a lot of time for yourself as a CEO, but what's the team building towards over the next 12 months? What do those roadmap goals really look like, and what are you most excited for?
Yeah, we're trying to launch very quickly with a mainnet phase 1, where essentially we have the basic data availability capability complete, the basic decentralized storage capability complete. And for that, in order to achieve and go to market quickly, we have to use off-the-shelf consensus, for example. And so that scales to, a specific point, maybe 300, 500 megabytes of data availability. But our goal is in the tens of gigabytes, even infinite scalability. And so phase 2 of the mainnet, which should happen either later this year or early next year, will then introduce that, where we not only horizontally scale the nodes on the network, but also horizontally scale the consensus layers, because the consensus layer becomes the bottleneck in that system. And so then we can introduce custom consensus, horizontal scalability, and then also go deeper down the AI stack. Like one of the things we're working on is this decentralized serving framework. You have some type of request, let's say it's an inference request, and it needs X amount of compute. Then through our partners, we can basically figure out, okay, how many GPUs do we need to pull at this point and to satisfy this particular compute. And so those are some of the things that are going to happen. And then ultimately, we want to get to on-chain model training as well. And when that happens, I'll be super excited, because then we truly have full visibility, community ownership, and can build towards this vision and mission that we have.
Yeah, I got to really say that. I mean, you guys know Ryan Salkas of Vasari, right? So he, I went to Jason Calacanis' launch event sort of a year and a half, maybe a year ago at this point, maybe a year and a half, right when AI was starting to really, I guess it was a year ago, when AI was just, everybody was gung-ho for AI all of a sudden. And he was pitching like, Mark, what are you doing in crypto still? You got to pivot to AI, right? And I sort of did view it as dualistic, like you should be doing one or the other. Ryan Selkis was the first person for me to crystallize the idea that crypto is yin to AI's yang. Like they really are two sides of one coin. They kind of need each other, and they fit together a lot more perfectly than even I was thinking until Ryan kind of said that in his year-end report. And when I read that, it kind of clicked for me. I was like, oh, shit, I think he's right. And then somebody else said, I think it was Voorhees, said that crypto is the only form of money that an AI can own directly. And that was another little aha moment. It was like, oh, shit, he's right. And that actually, that's a big deal. Mm-hmm. So I think you're barking up a good tree here, Michael, is kind of what I'm saying. So I think the ideas here are quite good. Obviously, I'm not alone. You have people much larger than me saying the same thing. So congratulations on all the success and on the idea. It's a good one.
Thank you. I guess you don't want to have humanoid robots handle cash. I get the message.
No Swift train.
Yeah. Well, unless they're my humanoid robot. I invested in Figure AI, so that's my robot army, right? So I'm cheering for them. So, all right.
Thanks for joining, Michael.
Thank you, Michael.
Awesome. Big pleasure. It was super fun. Great questions.
Okay. Thank you, man.
Thanks, everyone.
All right, Josh and Mike, you have brought us some really great stuff here today, and I really appreciate your time. Obviously, this is a sponsored episode, but I also appreciate your time. And I definitely had no idea what the companies we're going to be seeing today, and both of them were awesome, A+, wonderful ideas. And so thank you for bringing them out and showing them to us. So,
it's our
guys.
Pleasure.
So anything you want to, where can people find you online? What are your Twitter handles or X handles, all that stuff? Run us through where people can find you, and then we'll say goodbye.
Sure. Yeah. You can find us at Vanta Club on Twitter. Go to vanta.club. It's our website. And then, beyond that, you can find us on OpenSea, and you can find the OpenSea link directly on our website or on our Twitter. The Discord is gated, though, so you'll have to buy an NFT to see what's on the other side.
And where do I buy the NFT again?
On OpenSea.
OpenSea. Okay. Yep. Mike?
No, I mean, our parent company is Contango Digital Assets. You can find us at contango.digital. And Josh and I are both on Twitter. So I'm at Mike Contango. I think Josh is at Josh Contango.
I think at Contango Josh. I think at Josh Contango is taken, unfortunately.
All right, guys.
All right.
Thank you so much, Mark. This has been a pleasure.
Thank you. All right. This has been Hash Rate. My name is Mark Jeffrey. We'll see you all next time.